Hi, my name is Sam Lee. I'm President and CEO of Northisle Copper and Gold. We have one of the largest, highest return, lowest capital intensive copper and gold projects that isn't currently owned by a major. We are based in British Columbia on the northern end of Vancouver Island.
Sam, good to see you, man.
Yeah, good to see you too.
Yeah, we've made it to the end of the conference.
The coffee.
Cheers.
Cheers. Here we
Cheers,
go.
folks.
Perfect.
It's been a long one, but it's been a good one, right?
A very good one. Excellent. We were in Montreal on Monday. We had a marketing day there, a lunch Raymond James and Michael Gentile organized, over 15 institutions, half of which were generalists, which is a very positive sign in our market, right? It is unusual. We talked about this the other time, where we saw a little bit of selling pressure in our stock and a pension fund coming in to take it out. So we don't see that often in the market.
Yeah.
But it was clearly helpful, and it started to rebase the stock.
Right. Okay. Look, so the setup's good. People are interested, so that's nice. In fact, just before we kind of dive into your stock, because it was moving quite nicely.
Yeah, it is.
General's coming in, which is fantastic, but general approach to copper in this market seems to be intensifying because I think some of the former front runners are kind of falling by the wayside. They have not delivered. Not too many copper stories at the table, it seems.
There aren't too many copper stories at the table. Certainly ones that currently aren't owned by major companies. I think the one that's in everyone's sight right now is Foran, and I think that they came up with what I thought was a great deal. Something obviously not a very positive use of proceeds in terms of capital cost overruns, but to have a consortium group of partners that support a company that consists of cornerstone investors in Fairfax, that consists of Agnico Eagle being that strategic, who I think could be a potential critical metals champion for Canada, and then to have the Canadian Growth Fund, which is effectively a public-private investor to support Canadian projects, is very, very, very good. So that one is, I'm wishing them the best. I think that this is going to be the next Canadian mine, and certainly something that is going to be very positive for our industry. But outside of that, there aren't that many that are being developed right now, which is really exposing us and putting a lens on us as it relates to who's next. We were in the BC legislature just a couple of weeks ago talking to the MLAs and the ministers and the premier about this very topic, and it's clear to us that they are looking to expedite this next round of projects beyond the 4 that they just announced a couple of weeks ago, among the 18 that they've identified as high priority, of which we are part of that 18.
It's super exciting. I did a panel on stage earlier in the week, and I think Chris Baker at the Canada Growth Fund was on that. I think they talked about Foran, obviously super excited about that. I think Nouveau Monde, the graphite project as well. Right. But only 2 investments in the last 2 years, and $15 million behind them, looking for good projects, big projects in Canada. That's super exciting.
It's super. $50 billion can do a lot, right? And we've been talking about, what's the difference between Australia and Canada? Well, it's because their superannuation funds in Australia actually invest in our industry, right? And so now we're starting to see sort of a pseudo group, semi-private, semi-public group that now has billions and billions to deploy, and their mandate very clearly is to invest in every single Canadian project that gets developed, right? From top to midstream to bottom. So that to me is very, very exciting, and something we haven't seen. And so if we can continue this momentum around public and private partnerships that could expand cross borders provincially, right? So we have one of the largest pension funds in British Columbia. We would love to activate them to do exactly the same thing. British Columbia has stated that they want to be the critical metals champion for the world, right? This epicenter for the world, because we are literally on Tidewater. Our project is on Tidewater, and we are on the coast. The access to global partners, this reliance on or anti-reliance on the US, I think this is a very positive political motivation that activates British Columbia as being important.
Yeah, and the goodies on Canada Growth Fund, it's not just critical minerals, it's kind of more specifically green energy.
Correct.
That's what they're looking for. So super, super exciting.
Yeah.
Look, more of that anon.
Yes.
Looking at your share charts.
Yes.
It's moving. What's happening?
Sure. So I think back when we last spoke, we had just released our PEA, and as per my introduction, we still believe and are starting to get validation that this is one of the largest, lowest capital intensive, highest return copper gold projects on the planet that currently isn't owned by a major, right? And so after a few months of projecting that into the market, we finally feel like now we have market sanction. The market actually is starting to believe this. This is a $2 billion NPV after tax. This is at $4.20 copper, 2150 gold, right? That was the spot. That was the analyst consensus price back in February. At spot prices, which was $4.60 and $2,900 gold at that time. This is a $5 billion NPV project with a 45% after-tax rate of return for 29 years. All right, so this is a remarkable project. It is not an ordinary project. It is an extraordinary project. So that is now starting to be appreciated in the market right now. We are approximately a $250 million market cap company, so $2 billion. That's just above 0.1 times NAV. Right. That to me is going in the right direction. But I think that coupled with the fact that politically, over the last 2-3 months, we have seen a complete and utter alignment at the opposition, incumbent, provincial, federal, municipal, First Nations level, that we have to start taking advantage of these natural resource projects in order to preserve our sovereignty, right? That's the political note. I was, as I said, in legislature 2 weeks ago, and there's no doubt in my mind that opposition, incumbent, this is the prerogative. This is what is going to politically stimulate Canada's independence, and no one is singing from a different song sheet. And then finally, I think that from a board perspective, you know, we've always been aspirational, and sometimes I've been accused by you of having too many levers in the air and too much fragmentation in the direction. But the reality is the direction has always been predicated on this 35-kilometer porphyry district, of which we have just scratched the surface. So I've made this analog before. Think of Vicuña, right? BHP would have never gone into the Vicuña district had it not been for both the 30-year open pits that is generated through Jose Maria, and also the potential 50, 100 years, who knows, that could be generated from Filo. Well, we have that 30-year project now defined, and we still have that 35-kilometer district that we are just scratching the surface. So what are we doing as it relates to advancing that? Well, one, we just announced Alex Davidson joining our board. So for those that don't know... Yeah, you better explain this. For those that you don't know, Alex worked for Barrick as an executive vice president for over 30 years. The first time I met him was actually defending Placer Dome against Barrick's hostile takeover in 2006. He was obviously on the Barrick side, and I was on advising Placer Dome on the defense side. And we've cultivated this great respect for each other. Since then, I had subsequently advised him on a couple of unnamed mandates beyond that. But all that to say is that Alex, if there's a major gold project in this world, Alex has touched it somehow. Everything that is in Barrick's suites today, including Pakistan, the reason why they're going after Pakistan is because of Alex. And so to have an individual like that on our board that oversees not only our geology, but also believes in that district play and has the ability to see it and articulate it in the way he does, I think is there's no greater benefit than to have him in that spot. So I think that's huge validation. He also lives on Vancouver Island. So those people that say, you're never going to have permits on Vancouver Island, firstly, those people have diminished significantly because it is a red herring, because it is one of these reasons that people look to not invest, whereas it's actually is a strength of where we are, geologically speaking, and from a location perspective. Logistically, we are on Tidewater. This product would most likely go to Japan, which is a very, very, very close trading partner of Canada, right? So he understands all this. When he handicaps opportunities, he looks at it all. He risk adjusts opportunities, and because, in his words, he believes this is a potentially world-class district, next world-class district, that is so incredibly endowed with respect to infrastructure and location. That's why he wanted to spend his time here. The second individual that we picked up as a result of all this is Dr. Pablo Mejia. So we picked him up. He was the VPX of Ero Copper, which is approximately a $2 billion company. And what attracts him, he's a younger geologist, 25 years of experience, but his focus is data-driven decisions, right? So AI-driven decisions. And so even though his PhD is in geoscience, his strength and his value is to be able to take massive databases, for which we have over 60 years of data has been accumulated for our project, to synthesize it in a way that he identifies correlations. So we're talking IP, mag, drilling, surface mapping, finds the correlations, and then the most important thing about that is to identify the causation, right? So correlation is one thing, but causation is what the individual, the expert brings to the table, the algorithm brings to the table, right? And then once you have that algorithm, that's where an AI comes in, and it's just million-time processing power capacity, which is really important for a project like ours that has this level of data. So with this team now, right, where we have now, again, this Jose Maria, this 30-year project, starter project, if you will, it's still, from what I can tell, one of a kind. I can't tell any other project out there that has the same economics. But even so, even beyond that, you've just scratched the surface, and you could potentially make this into a multi-generational district with Alex, Pablo, and Robin Tolbert, our old VPX, effectively working together to use disruptive technology across 60 years of data. I cannot imagine a better team put in place. And so this is kind of stimulating a little bit more thinking around access to capital, because we talked about in the past, how do we sort of encourage and sort of attract different sources of capital? And as you referenced and I referenced, we're starting to see the generalists coming into the market a little bit, which is great. Starting to see the generalists coming into our stock, which is great. But there is so much untapped disruptive capital in areas that we would never explore, like Silicon Valley, for instance, right? So there's this company, Cobalt, I think we talked about before, raised $350 million from a lot of the tech giants, including Bezos and Gates. I'm going to a conference in 2 weeks from now. It's called the Mineral X Conference in Silicon Valley. And this is the incubator for Cobalt. So this is something that we've identified through Pablo's work and joint and partnership, an opportunity to access this incremental capital. So it's really starting to evolve into a very significant culmination in all of these things that perhaps seemed random in the past, all focusing on our mission, which is to advance this district as quickly as possible. And over the past 4.5 years, we've systematically delivered on each goal that we've set out. And I believe that's why we're getting rewarded right now in the shares.
Okay, a lot to take in. Don't drink any more coffee.
Yeah, that's right.
I want to kind of get a bit focused on the money bit, because that's always the important bit, right? So you paint a fantastic picture there, certainly with the board announcements. I mean, spectacular, by the way, well
Thank
done.
you.
Is the capital allocation going forward? Like, you've kind of moved from explorer, got a PEA, it's early days, right? We've seen typically responses, one normally does, well, hopefully, if things are going well with the drill bit, response in the market, and then comes off drill bit, and you kind of been, these are peaks and then drop-offs as well. You're going to move into a different phase of capital allocation now, and what's important and what's not. Exploration isn't going out of the way, because you're going to need to add some more data into the next piece, or the next economic study, right? So how are you picturing this? Because what I bought into a couple of years ago with you was this kind of phased approach, which seems all the rage at the moment. A lot of companies trying to do that and trying to tell this near-term revenue story or advanced revenue story, or at least a story where the capex is killing the project, right? So you were ahead of your time. So any changes to that in this environment? Any changes to that because of the boards?
Yes.
Any changes to that because of the numbers that came out of the PEA?
Yeah, that's a lot of questions to answer.
Don't start. More coffee.
More coffee, exactly.
It is the end of the conference, guys.
That's right. Okay, so let me just sort of correct a few things right now. Okay, so firstly, you can't just engineer a phased approach. You need to find higher grade or higher NSR value per ton ore, because if you get higher margin ore, then you get to reduce the mill size, which reduces the capital intensity. So we came to your show 2.5 years ago and said, hey, we just had this great discovery at Northwest Expo. 2.5 years later, this is the product. So it doesn't happen overnight. It was a very thoughtful, methodical strategy on doing the phased approach such that we come to this conclusion. So all that to say, I don't think you're going to see a lot of change, and a lot of people might be talking about phased approach, but it does take some time. You need exploration success in order to get there. And so I think we've determined that. In terms of your comment about spiking and ebbing and flowing, we actually haven't ebbed and flowed. So every exploration program, we raise about $10 million every year. So we've had 4 phases so far. And of that 10, we probably do 7 of that 10 directly into the ground drilling. So that's $7 million spent. Every time we release our results, it effectively translates into about a $25 to $30 million increase in market cap. So that is that 3-to-1 that I've told you about, and I charge all of your viewers and even yourself to look at our share price. It doesn't go straight up, it doesn't go flat and then up. It literally plateaus, goes up, plateaus, goes up. And no, it doesn't go down. Well, we reestablish the base value every time that we do it, because it's not random drilling. It's actually drilling a means to an end. And the end is clearly, at least at this stage, was the PEA. So we've now been vindicated that this is, increased in $1 billion in value, and we're confident, and hopefully we've provided enough evidence to people that says every program does have that 3-to-1 sort of impact. And that's why, you want to invest in companies that have majority or at least a significant portion of shareholders as insiders, because in the end, we do not like dilution. We do not like diluting our shares, and if we do it, we have to justify to ourselves there is that 3-to-1 return ratio after every program. And we've done that. We've been able to show that as part of our 4 programs.
But that's kind of, takes the right way, because I think the whole goddamn thing's quite hard, but that's almost easier, almost more predictable with the kind of the drilling phase. I know not everyone's capable of doing it, but in a systematic approach, a lot of people do that, or not people do that. I'm talking about this next stage, right, where people tend to just go, right?
Okay, so
how do you cope with that?
These are great questions, right? So in the end, exploration drives success. It doesn't matter if you're development or just exploration.
Right.
So your question is, how are we going to tackle this phase of development that typically is a yawner, or in some words, valley of death, right? The answer to that is simple. 1, get strong partnerships up front, right? And I think that just given our breadth and depth of our leadership, we have the ability to get to pick and choose. This is a very attractive project that has clean concentrates, that have massive amounts of gold, 7 million ounces of gold, 3.5 billion pounds of copper. This has a strategic significance to Canada. It has all the earmarks of creating a strong consortium partnership group to help us get to the FID very quickly, while still showing brand leadership around to the market. The market, the companies that get orphaned are companies that are orphaned, right? That don't establish those strong partnerships. Right, and I'll point to the Foran example as well. This is not a great news story, but the market accepted it and they didn't overreact, because that consortium group is solid. Right, that's a great consortium group that is able to withstand any of the pressures, and they're long-term, they're sticky. Similar to the Cote example. Right, if you think about the Japanese Sumitomo, they are probably one of the most sticky individuals out there. Right, they're there for the long term. They're committed to it. So that's a sort of consortium partnership that we can establish, and quite frankly, at a $250 million market cap, that's my domain. I can actually be quite dangerous now and be quite active around that type of corporate development structuring perspective. And I know what resonates in the market, and I'm confident that even if I don't know, I could ask my board, and they will know, and they will help me with the direction of to how that's structured in a way that advantages all of us as shareholders, rights holders, and stakeholders. So all that to say, to very simply put it, it's a 3-pronged approach. It's development supported by a brand, a very strong cornerstone brand. It's 2 phases of exploration, one that's driven by focusing on this northern corridor, which is about 70% EBITDA margins in our PEA. We're just going to keep it, make it bigger and bigger and bigger from a tonnage perspective. We're already 1/3 of the way through our drilling program this year that is looking to incorporate another portion of that property that's currently not in the resources, that's effectively attached to that higher margin zone. Well, we've already drilled 23 holes on it. We've released 18, and people can look at the holes. They're pretty consistent from a grade perspective right at surface, right? So internally, if we can actually establish a resource that increases our current resource in that northern corridor, high margin area materially, that's going to have a material impact on economics. And then of course the third portion of the exploration program is to how do we open up the district play, right? So again, we've got the Jose Maria, we need a discovery in terms of the 50 to 100 year proposition. For us, that's Pemberton Hills, right? Pre-discovery right now, of course, and I know I've been talking about it for a while, but these are tough decisions because they're low, deep buried porphyries, but we're getting closer and closer to that potassic stem of the mushroom, that potassic layer, which is the coveted layer in a porphyry. We're getting closer, we believe it's closer to the surface, and that's something we believe can open up the entire district very quickly, such that it's not just a single project, such that what we've defined is a starter pit to a multi-generational opportunity. So again, I know that this is a lot of information and it seems like it's perhaps not focused enough.
No, that's not even okay. I think it is focused, and it's you're coming into focus, and people go, oh, well, of course that's the normal process thing. But I just think where you started to what you're doing now, and that focus on what is the best use, what's the best return on each dollar allocated, right? It's absolutely about that. And I've seen the value destruction in this market in the last, even like in the last couple of years, right? It's just like there were a lot of copper stories which entered. And they're just paralyzed. They have not thought about this in a way which is going to get them to like whatever their first delivery point is, right?
But I also want to preface by saying, like, we're not the smartest guys in the room here, right? In the end, it's the project, it's the actual rock that allows us to activate these opportunities, right? And so, if you've read the book, Norm Keevil's book, right, the Never Rest on Your Oars, he identifies TSXV as being a company that starts with gold projects first, like AMLO, that fund the copper projects, right? Because gold projects have higher currency value, which means lower cost of capital, and the cash flow margins are great, but they're not usually that big. So he references the Hemlo complex as the thing that funded everything else that Teck was able to do. That is our project. Our project is 70% gold, 200,000 ounces of gold production a year for 6 years, and 50 million pounds of copper. And that super margin, that's a 70% EBITDA margin, then funds that big 25-year copper gold project, right? And then that in itself, as defined by the PA, is just the starter pit. So then the question becomes starter pit to what? That's where the 35-kilometer district comes into.
No, but I guess it's very, very attractive from that point of view, because like with the amount of companies come here and say, oh, we've got district-wide potential, it's like, and then they kind of blow themselves up chasing shadows.
100%.
Right?
That's the problem.
And that's what I kind of liked about this, is very quickly getting to a point where you kind of focus in on like what makes sense enough that we can take control of our own destiny. It's an anti-dilutionary conversation, right? And
100%.
More and more of those need to happen.
100%. So, Alex has joined our board, but I've been, using him as a consigliere for many years now. And about 2.5 years ago, when we started down the path of Northwest Expo, which is the high grade at surface but small, we were contemplating that versus the big underground porphyry at Pemberton Hills, right? Which would be probably 20 times the amount of cost to drill because it's deep underground, etc. And Alex told me, he said, focus on the near surface stuff. You're a junior company. This is how you create value as a junior company. Remember how Barrick started, right? He was the inception, right, of starting small and then growing into the world's largest gold company. That was because of Alex's vision, and that's exactly what he directed us to do. And of course, having another mining Hall of Famer in Dale Corman, who essentially set out that direction, like these guys smell it out instantaneously. Like guys like you and me, we've got a lot of experience in the market and other things, but man, these guys that are 70 years old, 80 years old, have been in the industry and mining Hall of Famers, they smell this out instantaneously, and that's where the direction comes from. It's a really important thing to know.
It kind of seems obvious when you say it out loud,
right? I know.
Where you go, well, of course you'd want to chase the money, of course you'd want to get to revenue first, but the amount of people that go chasing dreams and egos and fall in love with the process, not the outcome.
So we were tempted And the reason why we were tempted to go for the deep underground porphyry, and so there are companies that have been successful in doing that, like Filo, right? A few. And it is a tail wagging the dog. And I do, this is some advice to the junior companies. Sometimes you have shareholders that want you to go for the big score because they're already diversifying their risk by owning other companies, right? And so as a leader, as a corporate executive, you have to do what's right for the company. You have to diversify your risk for the company, not diversify somebody else's risk, right? And so that was the final decision that we essentially contemplated in not spending $20-30 million at Pemberton Hills of our own money and spending it all on Northwest Expo and this northern corridor, which ended up being the right decision, right? Because we did have shareholders that, hey man, just why don't you go for that big score? Because if you hit it, you're gonna be rich, right? And it's that level, exactly. It's that level of moderation. You have to understand where that direction is coming from. That direction is coming from the fact that they've already diversified their risk. As an executive of a company, it's up to you to diversify and your risk as a company.
I've heard some great cliches this week. Who doesn't love a cliche? People talk about it's luck and timing, but I've got to say, I'm not necessarily 100% buyer of that. I think you got to have smarts, and you got to have a plan, and you got to have a process, and you got to have the people who can execute on that and stick to it.
I agree, because you can't control timing. You can't control the markets. You can't control the cycles.
Make your luck.
So you have to be relevant in every point in the cycle. And I think I've made that point in the past. Like, you know what? When we're in the top end of the cycle, we're all going to be floating, and we're all going to be ripping it. And that is going to happen at one point in time. It's going to happen. We've seen it before. Okay. But in the meantime, you do have to be relevant. You are running a company to be relevant at every point of the cycle. And I have misstepped in a couple of ways around calling where we are in the cycle. But in the end, I think we've done a really good job of managing that at every point.
Well, like I say, congratulations with the hires.
Appreciate it.
That kind of puts you into the kind of 800-pound gorilla group in terms of the board, as far as I'm concerned.
I agree.
And now execute. So good luck to you.
Thank you. Appreciate it, Matt.
Cheers.